We'll come back to protectionism in terms of global markets, but let's just jump off with the Trump story. First of all, Anna and I started with the dollar. It had been stumbling before today's debacle. Last week he fired Comey. Today, it's mooted that he revealed, as it were, sources of information that his allies had given to him. Markets seem moderately sanguine, that's my take on it, for two quite momentous moments in political history.
They are fairly sanguine. It's important to note, however, that markets had begun to fade away the so-called Trump rally already at the end of the first quarter. That largely reflected domestic policy, the fact that the Republicans were failing to unite to get health care reform passed, which would have opened the door towards fiscal stimulus, including tax reform. So some of the wind had come out of the sails. This will probably only add to it. We've also had some downturn in data relative to expectations. And as a result, I think the markets overall are struggling to find leadership. But to your point, Manus, about whether markets are sanguine, we have to still recognize that the underlying macro fundamentals and especially earnings fundamentals are very supportive for these markets. So there's a bit of a tug of war between those factors underway.
That's really interesting. You mentioned the earnings story and you mentioned the weakness in the data story. And Manus has got this great chart here, which is all about how stock markets seem to be ignoring
by magic, Anna.
What's happened. Yes. Some would think we planned this. Ignoring what's happening in the underlying economy. So this is the US surprise index in the white, very clearly coming down over recent weeks, and yet the S&P 500 powers higher. That's all earnings, is it? It
is earnings. It's also, I suppose, the old Tina argument. There is no alternative. Bonds don't represent good value at these levels, and so from that perspective, I think participants are moving away from sort of index buying and looking for underlying themes. Earnings is one of them, and it's been a good quarter, especially, I would argue, in Europe. And the second, of course, is tech, which is helping to power the market. And of late, of course, the recovery of oil prices has helped that sector as well.
The other thing that we've noticed as well in your notes is that you're talking about a melt-up. Now, you're talking about the global perspective. So if I take there is no alternative, earnings are moderately better, who cares about the odd economic surprise that sort of, fade the move? I haven't seen melt-up written when we're talking about records in DAX, records in the UK, records in the S&P 500. There's a moderately bullish call, Larry.
Yeah, so we discussed several risks to our view, which is generally to be positive on equities, positive on risk assets. And of course, when one talks about risks, you think about things that could go wrong. For example, another round of evidence around China hard landing as an example of something negative. But it's possible that we'll simply get a better performing market, and by that I mean equity market, than most people envision, simply because things in the world economy and things in the corporate sector still seem to be very, very positive, and the buying power is there.
So you think the levels we're seeing in US equities at the moment, they don't rely on Trump delivering much in the way of infrastructure spend or tax reform? Is that a reality of what's priced in here, Larry?
I don't think that the market requires those things to hold these levels. To make further advances, you'd probably have to begin to see some movement in that space. But I would also argue what you'd have to see is the absence of further revelations that this administration is floundering and that the political risk could begin to rise. If we can get through these sorts of events, the market probably
What does it take? What does it take for markets to jump on these stories? Because, as Manus is saying, they don't seem to...
It's difficult. I think it has to be signs that the Republicans in Congress will move away from Trump. And thus far, they have not been willing to do so. They seem to be waiting and holding on because they want things out of these next 2 years, including things like tax reform and health care reform. If they find that they're not likely to get those sorts of things, then they may have to move away because, after all, at least in the House of Representatives, all of them are up for election in less than 2 years.